Hey, what up? So I know it's been probably about 14, 15 days. Been doing stuff in my regular life, so I haven't been able to do this, but we're here today. And it's the end of the month. It's the 29th of October. So we're gonna go over a few I say a few, but we're gonna go over about 12, 13 pairs, wins and losses on the daily time frame. You already know that this is all a daily time frame thing, and occasionally I sprinkle in something on the lower time frame, but not and I'm talking about smidget, not a bunch, because I believe through my almost 7 year journey of trading in the trading space that daily time frame is king. You know what I'm saying? And just like Heinz ketchup, good things always come to those who wait. All right, join me today again as I dive into the world of forex trading and see if I can help you avoid some of the common pitfalls that trap up so many traders. And you already know this is my 10-minute rant. So if you don't like my rants and my talks beforehand, I will make sure I put some little indicators so you can skip forward to the actual pairs, the wins and losses. All right. You already know that Forex is a wildly popular market. Just like the only bad thing about it, I think now, is that people got frustrated with the brokers and they all moved into or even the prop firm space of Forex and the brokers, and they moved to futures. But if you're still here in the Forex market, there is still ways to make percentages on your trading account and or money in your bank. While I believe trading the bigger time frames is more key and essential. Not knocking anybody else. If you trade the 5 minute, you don't have to get in my comment section saying, "Oh, I'm wildly profitable on the 5 minute, the 1 minute, the 1 second." I don't care. I'm telling you what works for me. All right, it's popular in the market, but did you know that the majority of traders end up losing money in the long run? And I'm not going to sit here and say 90%, 95%. That number is thrown around so much, but I actually looked it up. And now, correct me if I'm wrong, put the comment in the comments down below. I haven't seen a legit study where they come up with this 90, 95% of traders lose in the market. I've never seen any not theories, but any analytical data to confirm that number. All right, but it is a harsh reality that if but it doesn't have to be that way. Avoiding common pitfalls is key to success in forex trading, and that's exactly what we're here to talk about today. If you find a popular strategy, right, and you back test it and you do your analytics and all that good stuff, and stop following everybody. Stop. And the biggest reason I was not profitable in my first few years because I would drop one trading strategy, get to the next one, and I don't want to jump too far ahead. But what I'm saying is that you lose one time and you start changing up your strategy. Oh, this one don't work, and you start following somebody else. Then you start buying all these courses, and you follow 10 different people with 10 different strategies, trying to figure out which one is going to work. Newsflash: if you're trading on a daily time frame, a lot of strategies do work. You just have to know you, and you have to have done the homework and the back testing. All right. But this is strictly talking to new traders. All right. Often you dive head first into the market, relying on emotion and impulses rather than a solid strategy. And I promise you, this is depth. If I don't promise you nothing else, I can promise you this is a recipe for disaster. Emotions can cloud your judgment, leading to reckless decisions that can wipe out an entire account. Many traders also fall victim to the dreaded fear of missing out, or FOMO, where they feel compelled to jump into trades without proper analysis and risk management. Another major challenge is the lack of discipline, where traders fail to stick to their strategy. And I just spoke about that, letting your emotions get the better of you. Lastly, new traders often underestimate the importance of risk management, which is crucial in forex trading. I think that's the biggest thing overall, because it's not how much you make, it's how much you keep. That's just like anything. When you come to making money at your job, a lot of people say, well, I need to get more money, I need to get a raise, yes, those are very good things. But at the end of the day, if you have a proper budget and you make if you're making $2,000 a month, or whatever the case may be, I'm just gonna use this. Say you're making $2,000 a month, or let's up it up. Let's say you make about $6,000 a month, right? And then your bills total 7,000. Something is not going to get paid. You know what I'm saying? Or it's not even bills. It's your bills total up to 3,000, but you make 5,000. But now you frivolous spending the other, couple grand because you're like, oh shoot, I make 6,000 a month, but my bills only total 4,000. Man, I got 2,000 to splurge. Now you back to zero. See what I'm saying? But the thing is, if you're making 6,000, your bills are only 4,000, and you take about 500. You're like, look, 500 for the month, whatever. This is gonna be for this, and when this runs out, now you got 1,500 saved for the month. That can carry you into the next month. You continue doing the same thing, and in 2 months you got $3,000. And you get what I'm saying? It's about what you keep. You know what I'm saying? It's not how much you make and bring in, is what you keep. And I say that to say that about risk management. If you have a certain amount of account, if you taking 10 trades and you win in 9 and you lost, taking 10 trades, you win 9, but you lost 1, but your risk management is thrown off, and that 1 can lead to wiping out your whole account. When if you use the right risk management, when it being 9 and 1, meaning that 1 won't even knock out about 0.5 or 1% of your account. You get what I'm saying? Or your trades you took that month. Hopefully I didn't go too fast. Hopefully that makes sense. But risk management is the critical aspect of trading. All right. Because if you ignore that, it's going to be catastrophic for you. I can promise you that. Because then you get the over leveraging. And that's another common pitfall when traders take on too much risk, hoping that they score big profits, but often end up with significant losses instead. And then there's the scam brokers. But let me go back to your risk management and over leveraging. And here's what I've seen too. You can over leverage, right, with a certain account. You might be right, but since you over leveraged, when it retested, your broker might have a big spread, or some news might happen, or whatever the case may be. All right, it might wick you out. It might have a long wick, and it might wick you out, or it might go below what your account can handle, and you lose that trade. But overall, it ended up going in your favor. But if you risk the proper risk management and you don't over leverage your account, you'll be more successful in the long run. All right, and now we're gonna get back into it. The scam brokers, scam course makers, or whatever you want to call them. They prey on unsuspected traders, promising unrealistic returns and causing financial ruin. For instance, some brokers might offer high leverage, hidden fees, or manipulate prices to their advantage. And essentially, you do your research and choose a reputable broker to avoid falling prey to these scams. And those were big, especially around COVID timeframe. But now, I think the biggest thing now is and I'm almost done with my 10-minute rant. But the biggest thing now is course sellers. They promise you, hey, I can turn 100 to a million, or I make 13,000 in one trade, and just buy my course, click the link below. What I can tell you is that just do your research. If it sounds too good to be true, it's not true. Do your research. If you go to a lot of websites, just look on the website. Go to FTC, the Federal Trade Commission. It actually gives you certain things of how to spot scam brokers or scam, pyramid schemes, anything of that nature. All right. But if it sounds too good to be true, it probably is. All right. So the biggest thing I would say, another big thing is a disciplined approach, and having a solid trading plan can help traders avoid pitfalls by setting clear goals and defining risk tolerance and sticking to a strategy. Traders can minimize their exposure to emotional trading and impulse decisions. A well-structured plan also allows traders to adapt and changing market conditions, ensuring that you stay ahead of the curve. Disciplined traders are more likely to achieve constant profits and build a strong foundation and long-term success. Overall, this is what I'm going to tell you before we get into the rest. Overall, this is what I'm going to tell you, being honest with you. If you don't have a good job, or you behind, I'm going to say this, I ain't going to say good job, but I say if you're behind on your bills, your credit's not right, you don't have a good job to have savings in the bank, and to where you're comfortable, to where you like, you know what, I don't need the money. I'm already living like this. I'm just going to take my time and learn. The problem is when you start rushing to make all this money, is because you probably don't have a good, decent job or a good, decent income coming in to where you can suffice. You're already living the way you're living, to where you're not rushing into the markets trying to make the prop, trying to make these quick amount of money. The biggest thing is a lot of you traders, being honest, a lot of people that step into the market is they're broke or they stay on their last dime. You heard this one guy who said, this was my last $100. I turned it into 30,000 in a weekend. That is a tactic and a ploy to get your money, your last $100. You get what I'm saying? If that's your last $100, do not jump into trading. I'm going to tell you that off the bat. Do not jump into trading. Go get a job, save up some money, get you some good income in. It's nothing wrong with having a 9-to-5. Stop trying to be a day trader to where you like, oh, I'm going to make all this money. I promise you, a lot of guys that's teaching this stuff online are probably better, or they're better marketers, and they have money coming in from other places. And one of them is probably you, because you're buying this course, because they sold you the dream. All right, take it slow. Read some books. Do your due diligence. First of all, go get a job. Get some good income coming in. All right, get you a good savings account. Have some money set to the side. So when you step into trading, you're not so eager to make money so fast. And that's the method to get you to take your time and learn. All right. And the trading plan also, I'm gonna get back to it. A trading plan also serves as a roadmap, guiding traders through the highs and lows of the market by following the structural approach. Traders can eliminate impulse decisions and instead focus on making informed, data-driven trades. This not only helps avoid with emotional trading, but also boosts confidence and reduce stress. With a solid plan in place, traders can navigate the Forex market with ease, maximizing their chances of success. And by being aware of common pitfalls, traders can take steps to avoid this, significantly improving their chances of success. All right, in the Forex market, remember, Forex trading is not a get-rich-quick scheme. It requires patience, discipline, and willingness to learn. What I'm going to tell you this, if right now you don't have money in the bank, or you don't have a savings account, or you don't have money coming in every month that suffices what you got going on, leave trading alone. There's more profitable ventures out there, you know what I'm saying, to make faster money than trading. Because I'm gonna be honest with you, the ones who actually have the capital for trading, now I got it, there's prop firms out there, things of that nature. But if you have capital to invest, all your bills are paid, your credit is right, and you step into trading and you're learning and you have the capital set aside to trade your own account and compound over time. Look at that 5 to 10 years. Take it slow. That's what investing is. And treat Forex trading like investing. I ain't talking about day trading. I'm talking about investing, over the long term. Hold on, that's my watch. Get you some, invest in some stocks, S&P 500s. Have some other stuff invested before you step over here. Because I can promise you, if you just now starting off, I hope I ain't ranting and get off the case. But if you just now starting off, leave the 15 minutes alone. Stay on the daily time frame. Learn price action. Learn support and resistance. Learn what drives the market. Things of that nature. And spend a year on a demo account or get you a small account. Don't use your last $100, $500. Get to where you're comfortable where you at. All your bills are paid. Your credit right. You got a savings account. Then throw about 100 to 500 in there and swing trade on the daily time frame for a year. You know what I'm saying? And then if that doesn't work, then you go back to the drawing board, find another strategy. You get what I'm saying? Take it slow. Stop trying to get rich overnight. All right, I went past my 10-minute rant. Okay. And so what we're going to do is we're going to get into the pairs. Let me add this up here. All right. So the following pairs displayed. All right. My rant went about 14 minutes. All right. All right. And so the following pairs displayed in the market on the daily time frame. This is what the group I put out this week. So if you notice, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 pairs. All right, 17 pairs. Keep in mind, I know what you heard. Oh, I'm gonna stick to one trading pair, and I can promise you, look, if you trading on a daily time frame, you stick to one pair, you're probably going to get maybe about 2 trades a year, two good setups a year. All right. So keep in mind these trades do take a while to play out. Some might take about 7 to 8 days. Some might take 2 days. It just depends. Or you might be waiting for 14 days for the pair to actually set up. All right. So we're gonna go over the next pairs. All right. All right. Just keep in mind the following pairs are wins in October 2024. All right, based off the 2 candle high and low strategy with the 5 of the 14 ATR and 20 SMA. All right, I do go off the 5 of the 14. It just depends how big the candle is. All right, if the candle is super huge when it comes out, then I might go to the 5 of the 14. That's on you. Excuse me. That's on you to test out. Now, I'm giving you the strategy. I've already tested it out. You have to test this out. Stop being lazy and stop wanting everything spoon-fed to you. I'm giving you enough. I'm already showing you where the water is at. I can't make you drink it. I'm already showing you where the cheese at. Now you just got to make sure you know how to eat the cheese correctly. All right, or drink the water correctly. All right. All right, and then this is EU. All right. If you look this month, all the USD pairs. Let me go back. All the USD pairs were super strong this month. It was definitely super strong this month. So we had a good run this month on EU. Now keep in on USD pairs. All right, now keep in mind the election is next week. I think, yeah, the 5th of November. So I think that's next week. Be careful with USD pairs. If I were you in the month of December, because in December we ain't gonna trade at all. We might not even trade this November. But the biggest thing is I would wait to all the hoopla the first and the second week of November, due to the first week is the election and the second week is going to kind of play out. So I would wait till about the end of the second week or the third week of the month to place trades. You can still make a percentage on your account, trading, once in the third week of the month. You look at, let's go back. Look at how many pairs we had. You can find at least 5 good pairs in the month that's not USD that comes out with it. All right, now look, and let me see. Like I said, there's other things we look at. I look on the weekly time frame, the support and resistance, and I look at, I keep it simple, the 20 SMA, and I also look at the 14 period ATR or the 5 period ATR, and I also have an exit indicator. I'm not going to show the exit indicator right now because I use Heikendashi and I use the RVQ indicator as well. But you have to join the Discord and or Telegram, and it's free to get some more of the videos. All right, let's go over there. See, if you look right here, 2 candle highs. Boom, the first of the month happened, 2 candle highs. If you can, let me go back. I thought I was on the real trading thing. All right, let's go to this. All right, NCD USD, 2 candle highs. All right, if you look on this one, 2 candle lows, 2 candle lows, 2 candle highs, 1, 2. Once it breaks the 20 SMA, all right, and the higher time frames are the same direction. The highest percentage of a trade or your A+ setup, what I mean, that not a B+, C+, a A+ setup is when all time frames above it are going in the same direction. If you have the monthly, if you have the weekly, now you're on the daily, and they're all bearish or they're all bullish, depends on the trade you take, you're good to go. All right. So if you look right here, all right, 2 candle lows, 1, 2. I use the 14 period ATR, 1.5 times whatever the 14 period ATR is. That is my take profit and stop loss. All right. And then you use the exit indicator to give you that 1.5, 1.6 risk to reward ratio. All right. All right. Look at this. 1, 2 lows. 1, 2 lows. You enter in. Or if you're not too steady on that, I have videos on exactly putting pending orders in. All right, 2 candle highs, 1, 2. Now, when I say 2 candle highs, it is a high looking for bearish trades. All right, look at that. 2 candle lows. The lows, because they're at the low, is what I call them at the low. There's for buy trades. Highs is for sell trades. Write that down. All right, here we go right here. AUD USD. 1, 2 high. All right, use the 1.5 times the 14 period ATR. Boom, you got your risk to reward. All right, look, same thing. 2 candle lows. Swiss, Swiss Japanese yen. All right, here we go. All right, the CAD JPY. Look at that. 1, 2. My bad. 1, 2. 1.5 times the 14 period ATR. 1, 2. All right, that's the pound JPY. And if you can see, you see it right here. You just put a support and resistance line right here. Once it breaks that price, right here, once it breaks that price, you good to go. You good to go. Price action is king, especially on the daily time frame. These candles take 24 hours to form, so the price action is more solid and more defined and definite on the daily time frame. All right, look at that. Pretty simple. All right, pound AUD. All right, 1.5. This is 2 candle lows for a buy trade. All right, the following trades are losses. All right, if you look right here, I'm gonna tell you, I think 2 of these, the monthly time frame, were totally opposite. It wasn't strong. So if you look right here, I shouldn't have taken this trade because it definitely didn't show no signs of breaking this price action, and that's real choppy price action right now. It's real ugly. So, and if it's hugging the 20 SMA, you know that it's consolidation. But I took it anyway because I'm like, okay, I see my setup. But it's okay because if you risk properly, you're going to take losses. All right. And technically, it didn't hit the stop loss. It's just that my exit indicator that I had took me out. And I was like, okay, I'm out. And if you can see what I mean, if you trade one-to-ones like I do, if you can see that a lot of people are, and I'm going to say this a lot because I've heard this before. People say that, oh, you can't make money in the long run trading one-to-one. Yes, you can, because if you have the proper risk management and have an exit indicator, it gets you out of this trade before it hits the stop loss. So you take a small loss. See what I'm saying? Stop listening to people. Worry about your own strategy. All right. All right, as right here, I did exit out this trade. It's just taking too long. This is about 3 weeks. And I'm like, I got out with a little. I ain't gonna say it's a loss then. All right, I'm gonna say it's a win is a win because it's actually in profit when I got out. All right. But as you can see, this was two candle highs, came back and retest. Now I could have took it the right here on the retest up here, and then got in the trade right around here, which I would have been a lot more in profit, and it would have been a different one-to-one risk to reward ratio. All right. And other than that, that is my. Let me remove this. That is for the month. And I went about 23 minutes, which is good for the month. So far, I do have 2 more trades I'm in for the month, which is fine. Because if those close out in profit, hey, kudos. If it doesn't, we have our exit indicator on that gets us out, and we're still in profit for the month. But I say this to say that to say this. Please backtest your strategy. The first thing, if you don't get nothing else out of this, if you're down to your last $100, get out of trading. Do not trade. All right. You can still learn. Use demo. Use demo while you learn. But at the same time, build you up a savings account. Go get a good job. Don't sit here and say, well, I'm going to go for broke. And it's a lot more easier in the trading space if you have some income coming in and you're not so stressed about making your next ends meet, or you making your next money where your next meal coming from, because you have money already sufficed to live your life the way you want to live it. All right. Other than that, all gas, no brakes. I see you guys in the next video.